Hey everybody, we are live on YouTube a minute early. Can I take my mask off? Is that going to be okay with you? Just give people a chance to join us. And here we are, 4 p.m. Eastern. Welcome everybody to Martinis with Scott, episode 177, a show about winning momentum in life and in business. Thank you for joining me on this Thursday afternoon. I don't have any drinks today, but cheers anyways. I will be having martinis later. I think I'm tired today. I know that because I took 4 tries to try to open. Sorry, I took 4 attempts to get a thumbnail picture of me, which is what you do when you start your YouTube to do a live recording. It pops up a screen and says, it just gives you an opportunity to take a thumbnail picture. And it took me 4 attempts to try to get one with my eyes open. So I gave up, and I ended up doing it with a mask over my face and my eyes. So there's the explanation for the thumbnail. Why am I tired? Well, this is one of those weeks where I'm on 5 or 6 cities. I don't even remember, here on a Thursday afternoon. But I wanted the opportunity to get with you. We're going to have a quick show. Today, I got 2 main topics to get after. So the first one follows on Instagram and a post that I did earlier this week, and a theme that I've been trying to hammer on a little bit. And the post was generally along the lines of, is your business not making enough money? Are you a business owner, a leader, a manager, and are you not making enough money? Is your job or your career not going as planned? Do you have troubles in your job or your career? Is your life specifically or generally off track? Are you just off track? Do you have troubles? And if any of those things are true, if your business is not doing well and is troubled, if your job or career is not going well, and you're not, you're having difficulty with that, if your life is off track, can you accept the concept, the reality that you, with capital Y, capital O, capital U, that you need to change? You need to change. You need to change your thinking. You need to change your actions. You need to change your habits. You need to change your routines, because doing the same thing that isn't working isn't going to help. You need to change if things aren't going to plan in your business. And if you accept that you need to change your life, to change your job, your career, your business, if you accept that you personally have responsibility for this and you need to change, it begs the question, when? When are you going to change? By what objective measure are you going to decide that this is the time? Or is there going to be an objective measure? If your business is troubled, when have you hit that metaphorical rock bottom? When does that happen? How do you know? Maybe you could go on for decades just stumbling along and not making enough money and never creating any value, and never in your mind hit rock bottom and never implement that change. This company that I'm sitting in right now was run by a management team that had a bunch of trouble. It was a family-owned business, and the management team did some really good things, but they did some pretty bad things as well. And on the negative side, which I'm going to talk about here because these were people that needed to change, the most egregious of their failings was that they failed to implement internal controls. Internal controls as a business are, policies and procedures that makes sure that things are protected, that things are reported properly, that management can make good decisions, that, the most simple type of internal control would be a bank reconciliation, just to make sure that you're balancing your checkbook, so to speak, so that you've accounted for everything. So they didn't have good internal controls. They had a number of companies in a number of different jurisdictions, and they were not integrated, meaning they were treated like separate companies rather than bringing them all together under one umbrella so that you had stronger internal controls. The leadership here, who were not accountants, they're operating people and salespeople, were trying to micromanage the accounting and the finance team and the financial reporting. And all of that resulted in a company that rarely, if ever, reported its financial results to its stakeholders, such as a bank, right? If you're a company, you need to report to your bank on a monthly or weekly or whatever basis. And rarely, if ever, did this company do that accurately and on time. Okay. And so if you're in that situation and if you are the reporter and you never do things on time, what does your counterparty, in this case, the bank, what are they thinking? What are they thinking? Well, if it continues on and things never get changed, it creates properly or improperly the suspicion of incompetency of the borrower. So the bank would suspect that this company is not competent. It suspects evil and starts to assume evil motivations on behalf of the management team. And that's going to be the result of not having proper internal controls and not being able to report on a timely basis. And so what the bank will start to do and did do in the case of this company is they're going to view the company in a negative light instead of a positive light, and they're going to start asking questions. And the questions are going to be along the lines of, why is it that these businesses, because this business is a bunch of businesses, as I said, in different jurisdictions, why is it these businesses are not integrated? Why do they have different lenders here and different lenders there, and the systems are not integrated? Is that just an opportunity for ownership to play a shell game and move things around? I'm not saying they did. I'm saying these are the logical questions. When a bank starts to be suspicious, when a stakeholder starts to be suspicious, they start to ask these kinds of questions, whether there's any truth to them or not. So do they start to, is this team starting to move assets around? Are they, screwing us? That's what the bank is thinking on the security package. And this company was accused of exactly that from some of its prior lenders. The bank would ask questions to itself like, why is this company not reporting it to us on time? Is it because they do not respect us as lenders? They just don't respect us. They see us as a product, and they don't respect the needs that we have. Again, I'm not saying that's what happened here. I'm saying those are the types of questions that banks ask if you're not improving this particular hypothetical situation, or not so hypothetical, this actual situation with this company. Banks are asking questions like, why are there, I get these internal statements every month, and then when I get an audited statement, there's this huge variance. Like, they're just not the same thing. Like, what's up with that? Are they incompetent on their internal, or are they just lying to us? What's going on? The bank would ask questions like, if the company's getting in more and more trouble, if things are going bad, why have the management team that owned this business not cut back on their personal expenses, on luxury vehicles, on paychecks, on just cash going out the door to various family members? And so that's the type of question that a bank would ask. And in this case, with this company, did ask all those sorts of questions, various banks. And when banks start asking those sorts of questions, well, they don't really want an answer. They're kind of rhetorical questions. What they want is their money back, and they want to move on at that point. And this company, I think this management team ran this company for 15 years. And in that, by my count, I wasn't around the whole time. I've only known the company for about a year and a half. But by my count, they've had at least 9 banks in 15 years. Think about that, 9 different banks in 15 years. Now, they're not all overlapping because they had different banks and financial institutions and different positions and different jurisdictions, but 9 banks in 15 years. And one of those banks was what they call a high yield senior lender, which is basically a financial institution as opposed to a bank that provides credit to companies that are struggling and does it at a really high interest rate because it's taking a risk on a business that's not so good. And in this case, this lender, I don't know what they were charging this company. I wasn't around, but the history of this lender is they used to lend money out at 18% annual interest rate, 18%. Now, I've used that product a lot. I'm familiar with that company. I know how that business works intimately. And I will tell you that there is almost no borrower on the face of the earth that could afford to pay 18% interest on its bank loan forever, or even for a very long period of time. Could be a great product to, get a bunch of availability to fix your business, but no one can afford to pay 18%. If you're borrowing money at 18% on your receivables and inventory, you might be a troubled company. Okay, there's a good sign for you. So anyways, 9 lenders in the history of the company that I'm aware of. 6 of them were still remaining in 2020. And of those 6, at least 5, I would say, were in default, as far as I know, and largely all for the same reason, which was management refusing to change, refusing to report, refusing to put in internal controls. And, the frustrating part about that story is that the solution is so simple. It's just so simple. All they had to do was hire a top-notch CFO, a top-notch controller, and then get out of the way and let that person do the job that they were hired to do. And if, as a management team, you've been hiding a bunch of stuff before, or you didn't want to get caught, it didn't matter. The company was in such trouble that if they just brought in that top-notch professional, gave them the integrity, let them implement the controls, let the chips fall where they may, everything would have been fine. Everything would have been fine. But they didn't want to change. They refused to change. And so even when the company was pushed with this bank into what's called special loans or special accounts, which is when the bank is just basically trying to get rid of you, the company sought bankruptcy protection, ultimately fell into receivership, and the business was sold to me, which is why I'm here. We now own this business. And this family lost this particular business. And when that happened, even while that was going on, they still refused to change. They could not accept it was them that needed to change. They would not take personal responsibility, which is the key to this, personal responsibility. They wanted the other people to change, and they thought they could just continue on the way they were. And so they've lost part of their business. They haven't lost their whole business, and I hope that they do quite well and change their ways in the other part of their business and live happily ever after. But if you're in trouble, if your business is trouble, if your job isn't going the way you want it to go, if your career is failing, if your life is off track, you need to change. You, with a capital Y, capital O, capital U. You need to change. You need to take that responsibility. And if you accept that, when? If I don't want to say it's easy, it's just easier for us to understand if it's a person and they're an addict, let's say an alcoholic, and we all understand this concept of hitting rock bottom when the person just can't take it anymore. They've been arrested, or their spouse left them, or something terrible happened, and now they need to recover from that. That was rock bottom. I need to change. I finally, it's hit me. I need to change. When does that happen in a business? I just gave you a story of a management team that just never got there, and they ended up losing their business. Yet the irony is that troubled businesses often, if you know what you're doing, are not that hard to fix. Some of them, not all of them, but a lot of them are not that hard to fix. It's just that you don't want to make the decisions because you haven't hit rock bottom, metaphorically speaking, within that business. But when you do, the decisions, if you just realize, I need to change, I need to take responsibility, and I need to change or we're going to die, well, then it becomes easy to hire the right person. Like in this case, the controller or the CFO. It becomes easy to fire the wrong people. It becomes easy to make that decision to replace yourself because you are part of the problem. It becomes easy to say, okay, I don't want to totally give up on this plan, but I got to try new things because this isn't working, right? Once you accept that you're a troubled company and that you need to change, it becomes pretty easy. One of my favorite business comics is a one frame, I don't know who wrote it, but it's just been around forever. It's a one frame comic of a bunch of people sitting at a boardroom table, and on the wall behind them are 2 charts. One is sales, one is profitability, and the charts are doing the downward lightning bolt. If you're on the audio podcast, you haven't seen me draw that with my fingers, but it's just a downward direction on both revenue and profitability. And there's a bunch of people sitting around the table, and one woman who is part of that board team is saying something along the lines of, maybe we shouldn't change anything at all. Maybe we should just wait for something magical to happen, right? And that's the idea. It always made me laugh. I'm never changing. You need to change. You need to accept that responsibility. That's the key to turning around a troubled business. You need to accept that personal responsibility. And you need to do it quickly. You need to do it now, right? And if not now, when? You need to create objective. And how do you decide that? So one way would be to create objective measures, key performance indicators. And one of my favorites is cash flow. If you're losing cash, if you're losing cash on a day-to-day basis, you are going to zero. Okay, that should be the strongest indicator of when to change. We've talked about KPIs in other episodes, and we'll do more of that again in the future, I suppose. Make it objective, make it mathematical. That's one way that you can have a trigger for changing the way. Focus on cash flow. That's always a terrific thing to do. Another way, or in addition there too, you should have maybe an advisory board, people around you that you trust, but who aren't just yes people, who aren't just saying, yes, ma'am, yes, sir, I agree with everything you say, but who push back on you, and give you a path to consider. And then the responsibility is on you to change. So, okay, so that's topic number one. Also, I have here for you. I have a long-time listener who I won't say who this person is, but I'm going to call this person employee. That's the code for this person, employee, who is asking my advice or thoughts on salary negotiation. And this person, the employee, tried to do this in the context of the ATMOG, Attention, Trust, Meeting, Openness, and Gap negotiation framework that I promote to you on the Martinis with Scott channel. And so I'm going to call this person employee. I'm going to call the employee's boss, and I'm going to call the employee's company that this person works for, company. And I hope that I don't screw up and divulge too much information. Doing my best on that front. So this person emailed me. And if you have business questions, you want me to cover topics on the show, please feel free to reach out. I always like that to make this content as relevant and as value add as possible. So this person reached out to me, and the general lay of the land is that this person is a professional providing what I would describe as an internal service within a large company, and a high-end professional, someone who should be paid well. And the employee is working for a subsidiary, and the boss is working for the parent company, providing the similar service. And so bottom line is you have these two professionals providing this similar service, and employees doing it for the subsidiary, and boss is doing it for the parent company. And the employee has described their role as creating their own role. I have autonomy over the subsidiary, and I'm creating my own role, and has said that it's public information that this role within a company of this size, the subsidiary size, and for someone with my experience level, should be paid a lot more than I'm being paid. And when I say a lot more, I'm not saying 100%, but not far off, like a pretty big bump in salary. Okay, so this is not your standard cost of living adjustment. It's not, a 10% raise. It's not anything along those lines. It's a material, significant reevaluation of the entire comp structure of employee in this example. Now, it was expressed to me in percentages, and the truth is I have no idea how much this employee makes as a base. When I started work 30 odd years ago, I was making 15,000, and when I went to 20,000, well, that's a 33% increase, but it's not much money. So I'm going to assume that that's not the case in this situation. I'm going to assume that this employee is making a decent salary, and that the ask or the need here to be more to quote unquote market is a significant dollar amount, because I think that's the important part. The percentage is not really the important part. So this person wrote to me in their email, thank you very much, and went through the ATMOG. So on the attention side, because if you're going to persuade, if you're going to negotiate, you have to have the attention. And the employee said that they have the attention of the boss, because the company conducts an annual performance review shortly, which is in fact contractual. When the employee started, it's in their contract that they get to sit down with the boss and have a discussion. So attention, trust. The employee wrote a bunch about why the employee is very much trusted by the boss. So let's just assume that to be fine. I don't think I'm just going to take that for granted. I'm not going to say it's not an important part, but it seems to be taken for granted that there's trust there. Meaning, the idea of meeting in the ATMOG methodology is to try to understand the true emotional meaning, what is driving your counterparty in the negotiation, right? And so employee here says, when they email me about the meaning of this for their counterparty being boss, they speak about them having contributed a lot, and that has made the boss look better as well and be more respected within the organization. So I'm going to come back to that. Openness in the ATMOG methodology is sort of, what's possible? What is the universe of possibilities? What would you accept in this negotiation? What would the other party accept in this negotiation, as opposed to hard and fast positions? And then when you have that universe of possibilities, the gap, the ATMOG, G is gap, is really just finding that light, finding the if you had a Venn diagram, would be, the commonality, the light at the end of the tunnel is the idea behind the gap and the acronym there. And so what employee is saying in the email to me is on the openness front is that basically the company has lots of money, so paying me a lot more shouldn't be a big problem, and didn't have a lot to say on the gap, or maybe I've forgotten what the employee said on the gap. So let's go through these one by one, and I can provide my comments to you on that attention. So the employee said they have a contractual commitment to sit down. Well, I don't think that's necessarily the intention that you need for this particular negotiation. What you have is an appointment. You have a contractual appointment to sit down and do a salary review. Is that attention? Have you got the attention of your counterparty for what it is that you think that you need to discuss? So let's talk about what it is that you need to discuss, because it seems to me you've really got two separate issues that are related but are very different. One is a salary review for what you were contracted for, which is the job that you accepted. You're doing a salary review which would be based on performance. I assume under your contracts would be based on performance. Are you doing a good job? Are you meeting expectations? All that sort of stuff. And there would be a raise or no raise attached to that, right? So that would be the one thing. But the other thing is, it seems to me from the tone of your email, right, and for what I'm assuming on this, and certainly what I'm going to go with for the purpose of Martinis with Scott, because it gives me a good example to explain sort of the different parts of negotiation, you've redefined the job. The job that you were contracted for has clearly changed, right? So you talk about that a lot. Employee talks about that a lot in the email to me about defining their own role, about how it's grown, and now you can compare the new job description to the market, and I'm being terribly underpaid, right? So you have two, I think, related but very, very different discussions and negotiations. One would be your performance and how you should be compensated for that, but the other would be the job itself. The job itself. And do you have the attention of the boss, of your counterparty, on that particular issue? Because that's not what your contracted appointment is for. It's for the first part, but it's not for the second part, which is my entire job is different from what you hired me for, right? And so it seems to me, in my last show, I talked about setting the table in negotiation. I think you need to work right now, not waiting for the appointment. You need to set the table before you walk into this, which means you need to take your original job description, if you have one, and you need to point out the differences. Hey, here's my new job description. Here's how the role has changed from what you've hired me before. And for the fact I'm right about that. And you need to redefine the job the way that you see it. So you can say, hey, boss, here's the job that I'm doing right now. Here's the role, okay? And then secondly, you need to get the information from the outside market. here's the salary range that's typically attached to that job description, right? So two pieces of information. And the concept here on this is you need to get the boss thinking, wow, if I don't keep this person, I then need to go to market and I need to find somebody else at this higher salary level because that's what this job requires as a person at that salary level, not a lower salary level, right? So you want to change this from you to the job description itself. You need to pivot that, and you need to do that through setting the table in advance, and you need to do that now, and you need to do it with facts. Like, I just want you to understand that my job has changed. Look forward to talking to you about that in my contractual appointment, right? So you need to set the table. Go back to my last episode and listen to setting the table on the trust. So that's attention. So again, I want you to get their attention on that issue, okay? Not their attention in general, like I have an appointment. You need their attention on that specific issue, which is the job description, which it seems to me is changing. So on the trust, you said there's lots of trust and you're showing benevolence. That's all good. I think when you're doing something this dramatic, it just pays to remind your counterparty, in this case, the boss, to reassure them that you're not doing this with a gun to their head. You're not trying to put any pressure negatively on them. You're not complaining about this. You're just pointing out the fact that the role has changed. And as a company, they're going to have to deal with that. They're going to have to deal with that at some point. And so you want to open that discussion. That's the trust and benevolence that you talk about in your email. So that's all good. Meaning, you said in the meeting that your presence as an employee has helped your boss even become more recognized within the company professionally, and the importance of the role, this internal service that the two of you are providing. I would urge you not to forget the meaning of that, from the boss's perspective, that certainly this boss would have a budget. They would have performance criteria, and your performance reflects on your boss's performance, okay? And so I think that's a more important meaning that you're going to need to dive into and think about when you're talking to your boss. Your boss is rated on your performance in part. They're personally rated on your performance in part. And if your boss has gone to the company, has gone to their boss and said, I've created this junior role and I'm going to hire this junior person for this junior role. And now you're forcing them to go back and say, you know what, that junior person isn't so junior. That junior role is way more important than I thought. And so my budget needs to, double or whatever the number is. It's a big ask. It's a big ask. And I'm not saying it's the wrong ask. I'm just saying you need to understand that and not be dismissive of the meaning behind the importance of this and the real pressures on your counterparty, in this case being your boss. Openness. He said, the company's got lots of money. That's not going to be a problem. But what are you open to, right? What are you open to? Most importantly, are you open to leave, right? If you're entering into this negotiation and you're not prepared to walk away, you're not going to do well. You need to position yourself right now. This is part of setting the table, to have the confidence to know that you don't need to be there, okay? And this is not, I'm being treated unfairly. This is not, I don't like this company. This is not, the boss is not listening to me. This is, I've been here, my job has changed. I'm a professional and I'm doing this new job description, which is way more value added and should cost a lot more. And the company is not recognizing that new job description. So I have two choices. I have three choices. I can continue on and feel like I'm underpaid. I could go backwards in my career and do the lesser job description and be fairly paid, but I've gone backwards in my career, or I could just leave. Okay. And I'm not saying you want to leave, but if you can't walk away from a negotiation, you're kind of screwed, right? You always need to find a position. This is part of setting the table. Get yourself in a position where if you have to, you could just walk away. You can just walk away. Are you open to that? This is what openness is. What is the universe of possibilities? So have you talked to a headhunter? And if not, you should, okay? And you should talk to a headhunter. Don't go too far down the path because you don't really want to leave, but you want to know that you can leave. Okay. Do you have evidence that you talk to the headhunter? Get it in writing. Do you have job offers? You need to signal to your counterparty, to your boss, that there's a market out there, not only for the job description, but for you within that job description. And I don't want you to hit the boss over the head with that. I don't want you to send it to them in advance. I do want you to send your written job description that has changed in advance. And I want you to send, job postings that evidence this is what that job description is paid. But I don't want you to talk about the headhunter in advance. I don't want you to talk about that you could leave in advance, but I want you to have the confidence that you could leave if you want to leave. And if the conversation devolves, well, then so be it. You can then start talking about it if it fits into that. Similarly, openness is about the counterparty. Are they open to losing you? Maybe they are, right? That could be. And not because you're a bad person. They may think that you're the greatest person on the face of the earth and that you do a terrific job, but they hired you for this lesser job description and you're pitching them this greater job description. Okay. So you need to understand that. You need to understand that by hitting it on the head, by doing this pre-negotiation, by setting the table with here's where I see my job description has evolved. And maybe they're just going to say, well, we didn't want that. Right. Or maybe they're going to go, yeah, it has evolved that way. And thanks for the information. Now we can talk about that. You need to see what's open. And then, of course, another thing that I would ask you to be open about, what if you're right? What if the new job description is the new job description? What if they all agree that it comes with this bump, but just budget-wise, they can't possibly get from here to there today? What are you going to do about that? What are you open to? And I would suggest part of the benevolence, if you need to fall back to this, is saying, okay, what can we get to today? And what is the pathway to market? What is how I love you guys. I don't want to switch jobs. How do I get from here to there? What do I need to accomplish to do that? And that's something, are you open to that? You need to ask yourself that now and be ready for that discussion. The gap, of course, as I said, is the finding the way through. I can't really give you more information on that right now because you need to sort of do that whole discussion with the setting of the table, the negotiation, truly understand the meaning and what the two parties are open to, and then you find your creative gap, your solution. So in summary, I need you, my advice to you, and again, I have one email, so maybe I have my facts wrong. Maybe I read between the lines incorrectly, but if I'm right, and you can still take a lesson from this either way, if I'm right, I want you to understand that this is not about a raise. It's about redefining your job description and reframing the job that you do within the company. And in fact, it's about both. It's about the reframing plus the raise, plus your performance within that reframing. So don't think of it as just one thing. Don't think of it about just a raise. That's not what this is. You need to define that job description and your role within the job description. You need to get external evidence of the salary ranges tied to that job description. You need to get that to your boss on a super friendly basis pronto. I was thinking about this. I know this is upcoming, our meeting. This is what my contract says. Here's the reality. Here's some, I'm not asking for a raise in this memo. I just want you to know that this is what the market is paying for the new reality. Okay. Not talking about you at all. You're talking about the job and the reality of pay ranges that go along with it. I want you to talk to a headhunter because you get to verify the facts on what I just said. If you call the headhunter and you talk to them right now and said, here's my creds, here's the work that I do, does that fit within a job description? They're going to come back to you and say, here's 3 postings along those lines, and here's the salary ranges. And we think you'd be a perfect candidate for those jobs. Now you have the confidence and you can actually pull the trigger on it if you decide you want to, but at a minimum, you have the confidence to know that you could walk away, and then be prepared. Be prepared to walk away if you have to, and consider whether you're open to helping your boss and helping your company transition from here to there, because you're not asking for a small thing, you're asking for a big thing, and maybe they need a path. Maybe it's not binary. Maybe it's not, yes or no. Maybe it's, Here's how we'll get from here to there. Help them do that if you're open to doing that. Okay, so those are my thoughts on that negotiation, and I hope that other listeners got some idea of how I think about things anyways. Anybody have any comments, other things they want me to talk about? Throw it in the comments. If not, I'm going to sign off right now and go to a real bar for a martini. I guess that's it. We'll talk to you next week, everyone. Thank you.